Hey gang, Roger Scott here. It's Thursday the 25th and it's July. Boy, oh boy, oh boy. Usually Julys are pretty mellow, but the markets are really moving. All right, so the S&P's right around new highs, but as you can see here, the last high is lower and this high is higher. Look at the RSI. We have a higher peak the first time than the second time. This goes downwards while this goes upwards. That's divergence. Moreover, RSI is very, very close. This is the 10-day RSI. It's very close to 70, which means markets are getting a bit overheated. Now, we have a jobless claims in about 10 minutes. The numbers are expected to be around 215, 220,000. If they're in that range, it's not going to be a big influence on the market, and I'm expecting them to be in that range. But here's what I want to show you, and this is really important. This confirms what I'm seeing here, that the market is grossly overbought. This right here is a chart of the CPC. This is the put to call ratio. And this is a indicator that we use as a contrary indicator. All right. That means the more the indicator goes down, that means the market is overbought. And if this indicator goes to the 125 area, that means the market's oversold. If you notice here, we're at 73, which is telling me that the market is stretched out. And that means call activity is really, really strong, and it's bound to bounce back to neutral. Let me show you something else. Here we go. Now, this is the percentage of stocks in the S&P above the 50-day moving average. We're at 80th percentile right now. This is a chart of the last, this is the last 5 years. I put my little thing here. You could see the horizontal bar. You could see it at the 80 level. How often do you see it staying there and for how long? And more importantly, every time it reaches 80th level, what happens? It moves back to neutral. What am I seeing? I'm expecting a pullback. It's going to happen. It's going to be a nice one too. It's going to probably take us to the 50-day moving average right around the 280 level. First point of support is still at 290 on the SPY and then 280. But again, according to the put to call ratio, the market is way, way, way overbought. According to sentiment indicators, the market's really, really overbought. According to the S&P, aside from being overbought, we're seeing divergence, with the RSI hitting 71 here, 68 here, while the stock price hits 295.10, 302. So we have higher highs here, lower highs here. Divergence is a very strong indicator. So we have divergence, we have put to call ratio. Calls are really out of whack right now, and we have sentiment. And it's all pointing to a very minor, subdued correction over the next several days. I'm not expecting a big free fall, but I'm expecting tech stocks to really cool off and consumer discretionary stocks to cool off. Earnings are okay, nothing crazy. Netflix had some really, really interesting numbers, not good. Tesla didn't outpace. The stock is going to open down about 11%, maybe 12%. But again, everything here is pointing to a top right now. So be very, very careful and expect a little bit of a pullback. This is Roger Scott, and I'll talk to you guys soon.